Welcome to Investors Insights. Our topic today is the decade in review. Here we are, gentlemen, concluding the 2019 year, but also finishing out a decade. And it's always interesting to look over a decade to see what information and noise took place that people were concerned about, worried about, and didn't even have an effect or impact on the markets. We've had a very strong market in 2019. We're going into 2020. I'm already joking with people, will this be the roaring 20s, repeat from a historical standpoint? But let's look back over this past decade and see when people were having anxiety over certain topics, was it worth it? Bobby, you really brought up some great points this morning, had my full attention.
Yeah, so let's talk about some interesting facts. So it's been a decade of growth, but a lot of that had to do with last decade ending on such a sour note.
True.
And so the bull market turns 129 months old this December. That's a long time for a bull market.
It is.
And we appreciate it. It's been a good year, 2019. Sure. But a lot of that had to do with, again, last decade ending so sour, and that this decade we've seen a lot of central banks around the globe pumping money in the system because of what happened at the end of last decade. That's been a huge help.
That's very true.
And so also, interesting, only 4 countries have had better market performance in the U.S. this decade. Those 4 countries.
Which 4?
Are Jamaica, Cambodia, Kenya, and Georgia. So interesting. I didn't even know those had markets. So
a reason we've been pro-U.S.
We've been heavy, yes. We've been pro-U.S. this entire decade.
Just saying.
Yeah. And then the worst market has been Greece. Greece was down 93% this decade. So it's not all good around the globe.
No surprise there either.
And then some things that were not necessarily good, but commodities were down. Now that's great for us at filling up the tanks. But also a couple of things. Milk, if you like milk in your cereal, milk was up 98% this decade. And then also pork was down 57%. Coffee, we all love coffee. Coffee was down 66%. Okay. And then natural gas down 93%. Crude oil down 68%. So we like that again. Pumping,
very much so.
At the tank.
Keep more money in your pocket.
And then also student debt has nearly doubled. Not a good thing. Nearly doubled this decade. Then also, on average, 55% of Americans have owned stocks this decade. That's actually down from 62% last decade. We'd like to see that trend go back up.
Right.
Because it's been a great market this decade, so some people missed out.
Yeah.
But yeah, and then also a random fact here. The Village, Florida has had the biggest metropolitan population growth this decade.
Isn't that funny?
Retirees going down to Florida like always. We expect that trend to continue.
Mm-hmm. Yeah, very much so. We've got an aging population. All right, Bobby, great points to make here. Now, Adam, you jumped right in with Bobby to really prove that a lot of these issues that we hear about throughout a decade, people get anxious over, and they really may not be valid. They may not come to fruition.
Yeah.
So talk about that a little bit, because you were talking about 2 different ways of analyzing the decade. Give us those 2 ways, and also talk about how it doesn't necessarily turn out the way everybody's projecting.
Absolutely, and the theme for this year has been noise. I mean, let's go back to the decade. So we had 2 theories that economists came together and talked about. It was the debt hangover theory and secular segmentation.
Yeah. So in 08 after the big drop and debt was a big issue, is that where the hangover theory came about?
Yeah, and why wouldn't that cause anxiety? I mean, it was the worst recession since the Great Depression.
Right.
So that, of course, that's going to cause anxiety. Yeah. And the debt hangover theory, I mean, we look at that, and they're looking at a 4% interest rate at the end of the decade.
That's a great point.
Yeah. So they're also looking at unemployment over 10%.
Right.
We've seen that drop down to 3.5%.
Yeah. But at the time, though, correct me if I'm wrong, you were pointing out that people were saying, wow, we'll never see unemployment go below 10 again, or below 5 at best.
Yeah, people are freaking out about
and
it.
then from an interest rate standpoint, they didn't see interest rates going any lower. And
of course, we're sitting here now, interest rates under 2%.
Right.
And you have the lowest unemployment since 50 years.
Yeah, and that brings up a good point. One reason the markets are booming like they are is because, we've got low inflation.
Right.
We've got low interest rates. Mm-hmm. And then also from the standpoint, as you just mentioned, low unemployment.
Yeah, which means more room for growth.
Sure. So it's a good example that these projections that we see, you have to navigate through them in order to really understand what's taking place. Don't make a judgment and lock in on that's the permanent possibility.
Yeah, this isn't concrete.
Exactly. Yeah. So on that note, we hope that you have a great week. We hope you have a happy new year. We want 2020 to be healthy, happy, and prosperous for you. And we're going to keep you updated and use this information as a great example that as noise and news comes out, no need to panic, no need to take your anxiety up in worrying about it, because of the fact that here at Five Plan Partners, we manage our portfolios to our clients' plans. And based on that, if your plan is in place and your portfolios are on track, regardless of what's taking place, the data that's coming at you, we're still able to navigate through the moments to get us through the long term. So on that note, Happy New Year. We look forward to talking to you in 2020.